Hello everyone, I am Dr. Suresh Babu. Today I am going to discuss on a topic of investment. Investment is an essential a part of everyone's day-to-day life. Without having investment, every person should live a proper anxiety or a difficulties because of future is a lot of uncertainties. Investment give a life protection to everyone on a future days. We have a lot of investment options, but when we are looking about the meaning of investment, it is an asset that you put money into with the hope of that it will grow or appreciate into a large sum of money. An investment is an asset. Normally everyone looking about it is called an asset, or it's an item accrued with a goal of generating income or recognition. Because of a proper investment is having, you will get a good recognition as well as a future way of income. It is an economic outlook. An investment is the purchase of goods that are not consumed today but are used for future to generate wealth. When we are having investment along with active income, we can able to generate a passive income. That passive income will going to support for active income, and again we can able to improvise our standard of living. In finance, the term investment is a financial asset that bought with an idea that the asset will provide income further or will later be sold at higher cost of price for a profit. So one of the examples that is called, we have investment in stock market. We look upon the stock market or that our trading system, we can able to sell or purchase based on our income. But if it is purchased any type of stock, we can able to sell if it is a favorable conditions in the stock market, we can able to sell at higher price and generate more income. So while looking about the objectives of investment, the major that is called an income. So any type of investment, ultimate aim is called an income. Because of when we are looking about a bank investment or a post office savings investment or in the in the form of real estate or in the form of gold investment or in the capital market, anywhere ultimate income is generating, ultimate source that is called as what in generating income. So that income will adding all the time to grow the money or appreciate the value of any type of investment. And the second thing is called capital appreciation. So any type of investment, the major idea behind or objectives behind in the investment is called capital appreciation. The capital which grow either conservative way, aggressive way or in a speculative way. For example, if you are investing in the bank or in the post office, income will slowly going to be increased. That are called a conservative growth. But in case of stock market, especially in the form of mutual funds and all, we can say an aggressive growth. But even in though any investment in the stock market, it is called a speculative growth. We cannot predict over which time we will going to generate income. Sometimes as high income or sometimes is no income. That is the condition. So any type of investment we are looking into for a future purpose, that is ultimate aim is called as what a capital appreciation. And the third one that is called the forms of return. In any type of investment, normally it is called the periodic cash receipts or in the form of capital gain. For example, if you are looking about bank investment at all, normally we are adding once in a 6 months, there is an interest into our account. That are called as what a cash receipts. Or else we are selling into with a high profit, we are getting the cash receipt. Or that asset which remaining itself, that is called as what a capital gain. For example, we are deposit 5 years. So at the end of the 5th year, we will get a huge amount of money because of it is called adding interest along with the principal is called capital gain. For example, if you are investment in the stock market, finally we will get a good value of in form of return. That is called as what a capital gain. So the difference between or the opening value as well as the closing value which are going to be generating, that are called as what a capital gain. And one more that is major objectives of the investment is called safety and security of funds. So any type of investment, finally it becomes a more safety, nothing will going to happen. If we are investing any amount in the stock market, lot of rules and regulations and again law enacted in the country for the purpose of security as well as safety of the funds. And if any amount which are investment in the banks, finally we will get a good number of safety because of nothing will going to happen, anything will going to happen in the banks. And finally any type of investment, it is protected by the government, different type of laws and rules and regulations. And another one of the objectives, that major objective, that is called as what, minimization of risk. So when we are in the that any amount we are remained in the pocket for unnecessary speculation as well as purchase and everything going on. But any amount which are investment in the in banks or a financial institutions or in the capital market or in the mutual fund or anywhere, we can able to reduce our risk, future risk we can able to reduce. So this automatically we can able to see on future days through by way of any type of commitment. That's why it is called as what, a minimization of risk. And another peculiar feature of investment is called the liquidity. We can convert into cash at any time without fear of value or without scare of without loss of value. That are very, very important. So any type of emergency, future is always we are telling about uncertain. In such a case, we can able to sell any type of investment without having anxiety, without having the loss of value. That type of system is called liquidity. Then tax consideration, any type of investment, we have to pay the tax to the government. Normally it is called a tax deductible at the source. Even the interest up to a particular limit, we have to pay the tax. And even for capital market also we have to pay tax. Even mutual fund, if it is generating income, we have to pay the tax. So any type of investment, one of the main peculiar feature is the payment of tax to the government. By looking about the major objective, that is income, capital appreciation, forms of return, safety and security, minimization of risk, liquidity and tax consideration are the major objectives of investment. So we can see lot of investment, stocks, especially in securities markets or in the stock exchange, either in the form of different way we can able to purchase. Then bonds, second one is called bonds. So through direct investment in debenture or in the form of bonds which are issued by the government or a company. Then we can invest in the mutual funds, then exchange traded funds, then certificate of deposit. We have different retirement plans, then options are available, annuities are available, derivatives are available, commodities are available, hybrid securities or hybrid investment in the form of equity and debentures, then bank deposit, then post office savings. So lot of investment options are available, including real estate also is there. So any person, according to their own income as well as way of investment, they can invest anywhere, that is in the form of stock, bond, mutual fund, exchange traded funds, certificate of deposit, retirement plans, options, annuities, derivatives, commodities, hybrid investment, bank deposit and post office savings. So these are the lot of investment options. So before investment, that investment analysis is very, very important, very, very important. So any type of company, before going to be investment, we have to study a thorough in the market, either in the form of bank. One of the example I will going to tell you, that is called as what, bank deposit. So how much interest rate, which bank is giving highest interest rate. For example, if you are depositing into the any type of company by purchasing the share, we have to look upon, that is called as what, which type of company, that is called a company analysis from the industry. So from the industry, which company is giving highest return to a particular type of securities. So that type of study before going to be investment, then it is called investment analysis. So investment analysis is very crucial, because of any type of wrong analysis, finally there is a chance of loss of our investment. For that purpose, a thorough study, a detailed study of any type of investment is required before investment of funds. That system is called investment analysis. So investment analysis involves researching and evaluating a security or an industry to predict its future performance and determine its suitability to a specific investor. So that any type of investment, investor should study about how much interest rate or what price which prevailing in the market, how much unit price, then how much is the current market price. Based on that, he will go into invest. That thorough analysis always brings extra advantage to the investor. And investment analysis is the method adopted by analysts to evaluate investment opportunities, profitability and associated with risk in their portfolio. It helps them to determine whether the investment is worth it or not. So any type of investment analysis, normally an investor with the support of analyst, they are going to be evaluate the performance of the investment. Then only he can able to generate a good income, as well as based on the income whether he is going to be invest or not. That type of decision which are enabled us for the purpose of investment analysis.